So we are doing a sum which is a combination of absorption costing and marginal costing. October, November 23, paper 21. Are you with me?
Yeah.
Okay, can you read the question?
Javid manufactures a single product. He currently uses a system of absorption costing.
Stop. Can
It
you tell
is
me what is a system of absorption costing?
absorption costing is basically um I don't know the meaning of it, but I know the meaning of marginal. This meaning I don't know.
What is marginal costing?
It's basically like marginal basically means variable cost.
Okay, so marginal costing takes what cost into consideration?
Variable cost into
And
consideration.
absorption costing takes what cost into consideration?
Total cost into
Total
consideration.
costing into consideration. What is your total cost made up of?
Variable cost and fixed cost.
Okay, fine. So absorption costing is the when he's taking total cost into consideration while deciding anything.
Hmm.
Okay, but now he's considering to change it to marginal costing.
Okay.
Okay, you have some information. What is this information?
The following budgeted information is available for 1 unit of the product. The selling price, direct material and direct labor costs are given.
Hmm.
Then the budgeted production and budgeted fixed overheads are given.
Okay.
And, at 1st August, Javed held no inventory. The following actual results are available. The sales, production, and fixed overheads of August and September are given. And then
Oh,
they've asked us to make the absorption cost profit statement.
and marginal cost profit statement also.
Yeah.
So when they will give you absorption costing profit statement and marginal costing profit statement, they're definitely going to ask you to reconcile the profits.
Hmm.
The profits in absorption costing and marginal costing will be different because of one element. What is that element?
The fixed cost won't be used in the marginal cost, but the total cost will be used in the absorption cost.
And where will this fixed cost be included in?
In the this thing
The
absorption
closing
cost also.
inventory. In the
Huh.
inventory.
Huh,
Because
okay.
marginal costing will value inventory at variable cost.
Okay.
And in absorption costing, inventory will be valued at total cost.
Hmm.
So the difference in the profits will be because of the fixed costs that is included in the inventory.
Hmm.
Come on, make the absorption costing income statement, profit statement. How do you start?
So I'll
First you
start
do
with
for August.
huh.
Someone tell me, what is the sales?
You'll do 18 into 8,000,
Sorry?
which 18 into 8,000, the selling price into the sales,
Okay.
which is 144,000.
Selling price sales into it. Okay, fine. That will become how much?
1,44,000.
Okay, fine.
Then it says that there's no opening inventory.
Okay.
Then you do the purchases, which will be the
Cost of
product.
sales.
Yeah, the cost of sales only.
What is the
So
cost of sales?
the opening inventory plus the purchases minus closing inventory.
So now you're talking about not the purchases, but it is the production.
Production cost, yeah.
Okay, how many units have you produced?
10,000.
And what is this variable cost?
The variable cost is 7 plus 5, like 12. So 10,000 into 12.
And this fixed costs?
Fixed costs, they've given the budgeted fixed overheads, na?
Okay, so that means you have to find the OAR.
Hmm.
What is the OAR?
Overhead absorption rate
So
is
fixed
the,
cost per unit.
yeah.
36,000 is the cost that you're incurring for 12,000 units.
Hmm.
So what is your fixed cost per unit?
36,000 divided by 12,000. So it's 3.
So fixed cost is
3 per unit.
$3 per unit. Okay. Now you produced 10,000 units. Variable cost is 12, fixed cost is 3.
So 15.
So always remember the difference will be because of this 3.
Okay.
Okay.
Yeah.
Okay. So what is the total production cost?
150,000.
The total production cost is 150,000. Yes.
Yeah.
Then minus the closing inventory. What is your closing inventory? 10,000 units you produced,
Yeah.
8,000 units you sold.
Yeah. So,
So 2,000 units. 2,000 units into how much?
15
15. But when the same thing you will do for marginal costing, you will do 2,000 into how much?
into 12.
Into 12. Very good. Because marginal costing takes what into consideration?
Only variable cost.
Only the variable cost. So closing inventory is 2,000 into 15.
15.
So what is your cost of sales?
Maybe 30,000. Maybe 120,000.
120,000. So sales minus cost of sales. You've got what?
24,000.
24,000 is what? Your gross profit.
Yeah.
Okay. But now understand one thing. You will have overheads absorbed and under absorbed when you take absorption costing. Okay. You planned to produce how many units? You budgeted, you planned to produce how many units?
12,000.
Okay. You planned to produce 12,000 units,
Yeah.
but how many units did you actually produce?
10,000.
Okay. So planned production was how much?
12,000.
12,000 units. But units produced is how much?
10,000.
Units produced is 10,000. What does this mean?
That you produce less than what you were supposed to.
So if you produce less, that means you recovered less.
Yeah.
So you produce less. So when I say you produce less, you recovered also less. How much less did you recover?
2,000 units.
2,000 units into how much?
Into 15.
Why 15? Variable cost, it depends on production. You recovered less of your fixed costs.
Yeah.
So you recovered less of your fixed cost. So that means your fixed cost per unit was $3.
3.
So overheads under absorbed is how much?
6,000.
So overhead under absorbed is 6,000.
Means how do you know that you didn't recover fixed cost? You could have not recovered something else also, no?
What something else you could not recover? Tell me.
Like how do you know you're supposed to multiply it by 3?
See, variable cost always depends on the production, right? Variable cost depends upon the production.
Yeah.
So you produced, whatever you produce, you are going to spend and you are going to recover.
Yeah.
But fixed cost is always like on the total number of units you budgeted.
Okay.
So you are going to spend 36,000 and for 12,000 units.
Oh,
You
okay.
produce less also, you're going to spend 36,000. You produce more also, you're going to spend 36,000.
36,000.
But you produce less.
So your fixed cost you'll multiply by. Okay, I got it.
So you have under absorbed. Overheads is under absorbed how much? Overheads is under absorbed $6,000.
6,000.
Okay. So you have under absorbed overheads. Hello.
Yeah, miss.
You have under absorbed overheads.
Hmm.
You under recovered your overheads.
Yes.
You expected to recover more, but you under recovered, so it is a loss for you.
Yes, so you minus it.
You will reduce the profits
Hmm.
by
6,000.
1,000. Okay, so your profit as per absorption costing for the month of August is 18,000.
Hmm.
Are you with me?
Yeah.
So this is for August. Now we'll do for September. Come on, tell me, how will you start for September?
So you'll do 18 into 12,000.
1 minute. Your how many units you're selling? 12,000
12,000.
units into
Yeah.
18. Yeah, fine. So
Then
that
you take
becomes
the revenue.
216,000.
Yeah.
Then opening inventory will be the same.
It'll be 30,000. Last year का this thing will take.
Yeah, production
Production cost के लिए first is
10,000
30,000.
units you're producing.
Yes.
So for production, if you're producing 10,000 units multiplied by how much?
But you multiply it by 7 plus 5 plus 3.
Yeah.
Okay.
Closing inventory is there.
Closing inventory you'll calculate, na?
Now listen to me. You have opening inventory of how much?
30,000.
Units.
Hmm.
You have opening inventory of 2,000 units.
Hmm.
Correct?
Yeah.
You have produced how much?
12,000.
Produced how much?
Oh, produce, so 10,000.
You have produced 10,000 units. You have
Hmm.
sold how much?
12,000.
12,000. So do you have any closing inventory?
No.
No. So your closing inventory is nil.
Yes.
Okay. Your closing inventory is nil.
Hmm.
So this is your revenue 216,000.
Hmm.
This is your production costs
Yeah.
180,000 for September. Your
Hmm.
gross profit is 36,000. Yes?
Yeah.
Okay, fine. How much did you expect to produce?
12,000 units per month.
What is your planned production?
Planned production, it's 12,000 units. Yeah.
But how much did you produce?
10,000 units.
Okay, you produced 10,000 units. So you produce less or more?
We produce less.
That means you recovered.
Less.
How many units less you produced?
2,000.
You produced 2,000 units less.
Hmm.
That means overheads under absorbed how much?
6,000. You'll multiply by 3.
Hmm.
So you'll minus 6,000
Hmm.
from 36,000.
So you get profit how much?
30,000.
So you get profit how much? 30,000. So this becomes your profit as per absorption costing.
Hmm.
Are you with me?
Yeah.
Now let's do profit as per marginal costing. Come on. Revenue would remain the same.
Yeah.
Whether it is absorption costing or marginal costing, revenue will remain the same.
Hmm.
Okay, what is going to change? Opening inventory
Yeah, both they will change because opening
minus
inventory is there
production.
only. Yeah.
Sorry?
Opening inventory isn't there only.
Yeah, opening inventory is not there. Production is 10,000 units
Yeah.
multiplied by the variable cost.
Hmm.
How much?
Variable cost is 7 and 5. So 12,
So the
10,000,
production cost becomes how much?
120,000.
So your production cost becomes 120,000. Check.
Yeah.
But you have closing inventory. Closing inventory of how many units? Closing inventory of how many units?
2000 units.
So you have closing inventory of 2000 units. You will value at which costs?
Variable cost.
Variable cost is 12.
Well,
24,000. You will minus. Yes.
yeah.
Sales minus the production cost, you will get contribution.
Hmm.
You've only taken the variable cost into consideration.
Yeah.
Okay. Minus the fixed costs.
Oh yeah, you have to mind. So this is the marginal statement, right?
Yes. Minus the fixed cost, you will get profit.
Yeah.
There is an alternative way also to present the marginal costing statement.
Hmm.
In marginal costing, you assume what?
You assume what? You always use
You
variable
assume
cost.
that the units produced is equal to the units sold.
Okay.
You assume that the units produced is equal to the units sold.
Hmm.
So you take revenue of how many units? 8,000 units.
Yeah.
So it becomes 144,000
Hmm.
less variable costs. Variable cost also you will take of 8,000 units.
Yeah.
8,000 into 12 will become how much?
96,000.
96,000.
Hmm.
Sales minus variable cost will give you what?
Contribution.
Contribution how much?
48,000.
48,000 minus
Minus
fixed costs.
36,000.
So that the absorption costing statement is like a traditional income statement. And
Hmm.
marginal costing, because it assumes unit produced is equal to unit sold, it is okay if you do not show closing inventory in your marginal costing.
Hmm.
Okay. So you will have what? Profit as 12,000. Same thing. Are you with me?
Yeah.
Okay, fine. Now go for September. I'll give you some time. Calculate for September.
Yeah.
Revenue will be for how many units?
Revenue will be for 12,000 units.
12,000 into
18.
216,000.
Hmm.
Opening inventory same.
Right. 24,000.
Production cost also for 10,000 units same.
Same. Yeah.
No closing inventory.
Yeah.
Are you sure?
Yes.
Cost of sales 144.
Yes.
Sales minus cost of sales.
Contribution
Contribution
of
minus fixed cost.
72,000.
Profit. Are you with me?
Yeah, I'm just writing.
Now you have to reconcile. What do you have to reconcile?
Prepare
Absorption
state.
costing profit for August with marginal costing profit for August.
Hmm.
Absorption costing profit for August is how much?
18,000.
Marginal costing profit for August is how much?
12,000.
Which profit is lower?
The marginal costing one.
By
Because you didn't use
the
fixed
fixed
cost.
cost. So
Yeah.
that means in absorption costing, the fixed cost in the closing inventory is already included. So if you remove that fixed cost that is included in the closing inventory, you will get
The
the
marginal
marginal
cost.
costing profit. What is the number of units in the closing inventory?
2000.
2000 units is there in the closing inventory. This 2000 units you will multiply with what?
With 3, the fixed cost.
The fixed costs. So the difference is because of the fixed cost that is included in the 2000 units. Okay?
Yeah.
Yeah. So your marginal costing profit is how much? 12,000. So you just write the 2 and the difference will be because of the closing inventory.
Yeah.
Let's go to the next part. Can you please read the question for me?
Advise Javid whether or not he should change from absorption costing to marginal costing. Justify your answer.
Come on, tell me.
Yeah,
Fixed
well,
cost is included in the closing inventory, correct?
Yeah.
Closing inventory is treated as income.
Yeah.
So if I value my closing inventory at a higher price, that means I'm overstating my profits.
Yeah.
Now tell me, what is the benefits and disadvantages of absorption costing, benefits and disadvantages of marginal costing?
So, Miss, if it gives a higher profit, does that mean like it's beneficial or no? Because it's not giving a
Is it
proper.
is it okay to show your inventory at a higher valuation?
No.
No. But we always do this under our normal income statement, right? We include all the cost in our valuation.
Yeah.
This is the normal way. So
Yeah.
absorption costing is acceptable method as per IAS 2. But when I do absorption costing and if I don't produce as per the budgeted, then under absorption and over absorption can happen. Okay, now tell me.
Okay. So, firstly, in marginal costing, you won't need to do under absorption and over absorption. So that will be an advantage for using marginal costing.
You don't
Then,
have to do or it won't arise.
yeah, it won't arise only.
First, you give me about absorption costing, darling.
So first is that it's acceptable under IAS 2. Then, then it gives a higher profit because of the inventory. Then it is useful for long-term decision making, and you can use it for determining the selling price. 3 are enough now.
Okay, fine.
Then for sorry,
Yeah, how about absorption costing?
marginal, no, I said absorption. So in marginal costing, you won't need to calculate the overhead and underhead absorption rates. Then it's useful for short-term decision making, and then it does not no, that's a disadvantage that it does not include fixed costs.
What is your advice?
My advice is to use absorption costing because it is difficult. Like not all costs can be split up into variable costs and fixed costs, and it's absorption costing is useful for long-term decision making, so it can be useful in the future as well.
Over absorption of overheads.
Overabsorption of overheads can be if the production is more than the budgeted production and the overheads are less than the budgeted overhead.
Okay, over absorption means what?
Overabsorption means that you produced more than you planned.
You over recovered.
Yeah, you over recovered.
Okay, actual expenditure was less than budgeted, or
Yeah,
actual production is more than budgeted.
yeah.
Okay. One difference between a cost center and a cost unit.
So a cost center is where the costs are allocated, and a cost unit is where
What
like
do you mean by cost center? Cost are
cost
allocated. What
centers.
do you mean by that?
It's a place where the expenses are incurred.
Okay. How many types of cost center do you have?
Two,
Which
service and production.
and what is a cost unit?
Cost unit is the place where the cost is charged. Like per unit, the cost is charged over there.
Cost unit
Yeah.
is the product that you're actually making,
Okay.
to which you will allocate and apportion the cost.
Hmm.
Can you again tell me the difference between a cost center and a cost unit?
A cost center is where the costs are allocated and where the costs are incurred, and cost unit is where the like wait, can you explain it again? The cost
See,
unit.
the
Sorry.
cost center. Okay, when
Hmm.
I talk about cost center, it is basically a department
Hmm.
or your production department or your service department where your costs are incurred.
Hmm.
Either it can be factory or canteen or maintenance department is a cost center.
Yeah.
In the cost center, you will produce the output. That is a cost unit.
Okay.
So the cost unit is produced in the cost center.
Okay. So it's the output that is
The
produced in
unit
the
of
cost.
output to which you are going to charge the cost that you are incurring in the cost center.
Okay.
What is a cost center? If you want to take in a simple term, a cost center will be a department where you incur your costs.
Hmm.
And the cost unit is the output that is produced in the cost center to which the cost is charged.
Okay, I got it.
Okay,
Yeah.
come on. Read the G part.
State how closing inventory is valued using each method of inventory valuation.
So there is one method of inventory valuation which is FIFO. What is FIFO?
First in, first out. It's that it assumes that the inventory that is bought in first is sold first.
Now, bought in first or produced first is sold first.
Sold first, yeah, produced first.
So the closing inventory will be valued at the most recent
Recent, yeah.
price. Okay.
Hmm.
What is the weighted average or AFCO method?
The average cost of inventory is recalculated after each purchase.
Every time you purchase, you add the cost to the original cost, you add the units to the original units, and you find the average.
Hmm.
So every time the units are purchased, average cost of inventory is recalculated.
Hmm.
So closing inventory under FIFO is valued at which price?
FIFO is valued at whatever the lower prices.
FIFO,
Yeah, the most recent
most
price.
recent price. Under
Hmm.
AFCO,
It's recalculated after each purchase.
okay. And under LIFO,
Before is last in, first out. So it's calculated at the first price.
old price. Yeah.
Yeah.
Okay, fine. So this I complete. No, there is one more part of it. Read.
Explain, Javid is investigating the just-in-time method of inventory management. Explain a principle of JIT method of inventory management.
What is the just-in-time method of inventory management?
It's basically when the supply is received exactly when it's needed or when an order is placed.
Okay, so supplies are received exactly when they are needed in the production process. What is the advantage of this?
That there will be no storage costs.
Okay, so you need to write 2 points. Okay.
Okay.
Okay, fine. So with this, we complete the fourth question, October, November 23 paper. 21.